It was nice to see a bit of a turnaround in the market. We started off in the red, but we did see some higher US indices coming through overnight, and as a result we did see a market closing higher, up around 0.2%. Really, we did see that turnaround sort of when we saw those Reserve Bank minutes come through, but it was fairly in line with what we were expecting, that rates will remain on hold for some time. The consumer staples sector was the best performing sector. That really was driven higher by Treasury Wine Estates after we saw they rejected that bid, and also had some other news come through. But also looking at materials, they performed pretty well. They were closed up 0.25%, and of course we did see those iron ore prices falling 2.2% overnight, but we did see copper up 1.2% and nickel up 4.2%. So there was a bit of a tug of war there, but mostly those iron ore stocks did perform well, particularly Fortescue, which was up around 4%. The worst performer really being that information technology sector, which was down 0.9%, but it was nice to see our market closing in the green.
And considering the transition that China's economy is going through, and the different drivers and what that means for commodity prices, I mean, could you make an argument that the likes of copper in particular, but also nickel, are going to have, I suppose, a higher level of sustainable demand in future years than something like an iron ore price, which is, obviously a key steel ingredient, which is an early component of economic growth?
I think we could start seeing some of those commodity prices picking up. We do know they have been lower as a result of this demand, but particularly looking at iron ore, we know that it is down around 27% since the start of the year, so significantly coming under pressure. But looking into the second half of this year, we do expect to see some of that supply growth slowing down here in Australia. We know that that's been one of the big concerns, but once Rio reaches that targeted production rate of around 290 million tonnes, and Fortescue reaches their targeted rate of around 155 million tonnes by the middle of this year, we do expect to see some slowdown in supply. And we are also expecting to see a recovery in China's steel production as we see some of those tightening or loosening credit over there. So we do think that China's demand has reached a short-term cyclical bottom, and we do expect growth to pick up sort of towards as the year progresses. So potentially we could see in the second half of this year some of those iron ore prices picking up again.
For Treasury Wine Estates on the market, coming out and notifying the market that it was rejecting a private equity, rather conditional and early bid by KKR. Your thoughts on Treasury? I mean, is this now in play, do you think, this stock?
I think it is. We have seen the stock trading higher, up around 18%. As you said, it was a result of the bid being rejected, and I think investors are expecting a higher bid to come through. But it does look like a fairly strong bid. We see the stock trading at a high price to earnings ratio of around 33 times. So we do think that price that came through at around $4.70 did look fairly attractive, but obviously the company's come through and said that it is too low, and so we will be waiting on seeing if there are further bidders coming through. Today the stock price was trading higher. The company also indicated that they were looking to drive profit growth through increased investment in marketing, as well as looking at a cost reduction program. So they're looking at reducing costs by about $35 million in 2015 and cutting jobs as well. Looking at some of their US assets, we know that there's been quite a bit of media speculation recently that there's been some interest in a takeover of their US assets. The company's obviously rejected all of that speculation, but we know that their US assets have been underperforming. But looking forward, we do think that there is potential for their US assets to improve, particularly over the US wine cycle. We do believe there will be strong demand and new supply. We also know they operate mostly in the commercial wine space, and that commercial wine space is highly leveraged to that demand supply cycle. So the outlook for us for their US assets does look fairly positive. However, in Australia, their assets here do look to continuing to be under pressure and suffering some difficult trading conditions. So probably from around financial year 15 and beyond, we do remain more optimistic on the stock. But in the short term, it really will be all focused on that merger and acquisition activity.